Welcome to the Fear and Greed Weekend Edition, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. It was a big week for COVID, commodities, corporate deals and confidence, both business and consumers, as well as the labour market. Starting with financial markets, records were hit across equity markets on Wall Street and in Europe during the week. It wasn't quite the same locally, but the mood was still buoyant. Wall Street hit records ahead of the second quarter earnings season. There's plenty of optimism about interest rates remaining low for a prolonged period in the world's biggest economy, particularly after Fed Chair Jerome Powell said current price rises were transitory. Several of the big banks reported strong earnings. The one sector that just started to wobble just a bit by the end of the week was the tech stocks. The Australian market didn't move too much during the week, but there was plenty of corporate activity. More of that in a moment. The big miners did well on the back of Chinese growth figures that showed the world's second largest economy growing at a near 8% clip, powered by manufacturing, which has a rapacious appetite for Aussie iron ore. That's why the iron ore price is trading at around $220 a tonne. It was good to see the gold diggers outperforming on the back of a gradual rise in the price of gold. It's back around $1,830 an ounce. There's plenty of investors out there still interested in the precious metal, just to keep things safe. Not a lot going on with the banks, at least in share price terms. The retailers did a bit better, while the debate about whether discretionary shops should stay open during lockdowns continued. Oil prices rose earlier in the week and then fell amid signs that OPEC might eventually increase production. Let's hope so. The Aussie dollar continued to trade under 75 US cents against the cross currencies, particularly the New Zealand dollar, which is relevant because it's about the only place we can travel to. The local unit has fallen. The New Zealand dollar is stronger after the central bank this week said it was ready to tight monetary policy. It's worth noting a couple of other commodities. Gas prices in Victoria jumped to record levels of more than $58 a gigajoule, about 10 times average, thanks to cold weather, low production and diminishing stores of reserves. In New South Wales, prices were closer to $30 a gigajoule, and they were $20 in Brisbane and Adelaide. Earlier in the year, they were trading in the $5 to $6 range. Thermal coal prices hit a decade high, in part due to China banning Australian exports. And another commodity, albeit a soft one, that's doing well is wool. Beijing has lifted its quota of Australian wool imports and now accounts for 90% of local exports. And prices are up 65% since their bottom in September last year. As always, there was plenty of international news. Finance officials in the top 20 developed nations backed a 15% global minimum corporate tax rate to deter big companies like the technology giants shifting earnings to low tax rate countries. US President Joe Biden was getting frustrated with cyber attacks out of Russia and gave his counterpart, Vladimir Putin, a call. I wonder how that goes. How do they greet each other? President? If Moscow didn't do something about the attacks, Mr. Biden said the US would start treating them as a national security threat. Sir Richard Branson succeeded in his attempt to complete the world's first private space flight, reaching an altitude of 88 kilometres over the New Mexico desert. That's high enough to experience weightlessness and see the curvature of the Earth. Space tourism has begun. The European Union said all new cars sold in 2035 and beyond will have to be electric. Charging points will be installed every 60 kilometres on major highways as part of reforms to kickstart EVs. But unfortunately, COVID tended to dominate overseas news. Southeast Asia is now the epicentre of the Delta variant outbreak, with Indonesia reporting extremely high numbers. Numbers in Europe and parts of the US are also rising. While the United Kingdom is opening up, there's plenty of restrictions being introduced in other parts of Europe. French President Emmanuel Macron has introduced new rules that don't allow anyone to enter a bar, restaurant or cafe from next month unless they've been vaccinated. It triggered about 1.7 million bookings for a jab in a 36-hour period. Nothing like a good wine to motivate the French. And the number of cases in Tokyo hit a 6-month high just a week before the start of the Olympic Games. In economic news, business confidence took a hit last month as restrictions were introduced along the east coast of the country, but levels remained well above long-term averages. The outlook is a little less assured with the Sydney lockdown extended and Victoria going into a 5-day shutdown. Consumer confidence was surprisingly strong this month, despite the Sydney lockdown. The Westpac Melbourne Institute survey showed a surge in Victoria more than offset a drop in New South Wales. But the big economic news for the week was the labour market. The unemployment rate fell to its lowest level in a decade last month, hitting 4.9%. This is one doozy of a jobs market at the moment. A year ago, the unemployment rate was 8.4%, and employment is now up more than 1% than where it was pre-coronavirus back in February last year. The economy created 29,100 jobs last month. 51,500 new full-time jobs emerged, while 22,500 part-time jobs were lost. The fly in the ointment is the lockdowns. That could stop the jobs growth momentum very, very quickly. In other news, Telstra was approached by the Morrison government about taking an ownership stake in the Pacific operations of a telecommunications company, Digicel, based in Papua New Guinea. Canberra wanted to block China from buying the business, according to the Financial Review, concerned that if the Digicel 3G network fell into Chinese hands, it could be used to spy on PNG, access sensitive data, and disrupt activity in the region. New figures showed cyber attacks cost the economy $3.5 billion last year, and calls to the Australian Cyber Security Centre's hotline were 4 times higher in May than a year earlier. Hackers were particularly active in the finance, health, education and energy sectors. The West Australian government wants to create a 15,000 square kilometre renewable fuels hub in the Goldfields Esperance region. The government hopes the hub will become one of the biggest in the world and will produce wind and solar power, green hydrogen and ammonia. Along the same sorts of lines, the new boss of the Australian energy market operator wants the electricity grid across the nation to be able to run solely off solar and wind generation by 2025. The highly ambitious target, to say the least, will force the country to integrate more renewables into the power system. And bonus payments made to the top 100 company CEOs took their biggest hit on record during 2020, with almost 1/3 receiving nothing at all. Tough gig. Sort of. According to the survey by the Australian Council of Superannuation Investors, CEO cash pay fell 26% to $2 million on average. The highest paid exec was CSL's Paul Perreault, who took home realised pay of $43 million. Greg Goodman from Goodman Group and Shamara Wickramanayaka from Macquarie Group were also among the highest paid. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and of course, my favourite story. The biggest story of the week, unfortunately, was COVID-19. The lockdown in New South Wales was extended for a fortnight, while Victoria went into a 5-day shutdown. This weekend, 11 million people are in lockdown. The federal government has had to come to the party, promising funding to help people who have lost their jobs and businesses who have seen a cut in revenue. The numbers in New South Wales are way too high, and there are too many people in the community while infectious. Of the 97 cases yesterday, more than half were in the community at least part of the time they were infectious. The state will be lucky to come out of lockdown at the end of the month. The Victorian situation is on a knife's edge, with infectious individuals attending an AFL and a rugby match over the past week. The only way out is through vaccinations. On that front, the pace of jabs is picking up, that's good news, and we're heading into a period where the number of fully inoculated people will start accelerating. That's because the full rollout started around 10 weeks ago. At the moment, only 10% of the population is fully vaccinated. The sleeper story of the week came from the buy now, pay later world. I think it's a huge story, and we consumers should be the beneficiaries. Global technology giant Apple will soon allow users of Apple Pay to purchase in instalments. PayPal this week launched its new buy now, pay later offering in Australia to its 9 million local customers. Next month, Commonwealth Bank, which owns a stake in buy now, pay later group Klarna, is due to launch StepPay, another instalment product. New payment systems are alternates to cash, credit cards, and the buy now, pay later market leaders Afterpay and Zipco. Both those two companies' share prices were hammered during the week as a result. The Goliaths are taking on the Davids, but there's no guaranteed fairy tale end. The winners should be we consumers, because we'll have many more options and that will push prices lower. The most remarkable story is how many deals are being done at the moment on the ASX. It's out of control. Well, sort of, but not really. In the past couple of weeks, companies buying or being targeted or demerging or selling include Wesfarmers, Drug Group Australian Pharmaceutical Industries, Gold Digger Chalice Mining, Spark Infrastructure, Sydney Airport, which rejected a $22 billion bid. Take a breath. Seven Group, which won 50% of Material Buildings Group Boral, Tabcorp, Telstra, Premier Investments, Myer, Westpac, Challenger Life, Crown Resorts, and the Star Group. Whew. There's pent-up demand following COVID-19 and the economic recession, an excessive amount of capital on balance sheets, particularly in companies who raised money last year, and the likelihood of low interest rates and high government spending in coming years. The big question is whether people are spending money too freely, and will these investments pay off for shareholders? My favourite story of the week was all about nuts. Did you know that Select Harvest, Australia's biggest almond grower, ships around 3 billion pounds of almonds every year? 3 billion pounds. I like natural almonds. I really like salted almonds, but the best are definitely the tamari almonds. You get them in the little packs in the supermarket. Almonds are among the most nutritious foods known and a great source of vitamin E, protein, fibre, and monounsaturated fats, and they're good for your heart. Chinese, Indians, and Europeans love our almonds. Why wouldn't it be my favourite story? We don't have a most amusing story category, but if we did, it would be the one about Brazil's strongman president, Jair Bolsonaro, having the hiccups continually for 10 days. Okay, not very funny for him. A week ago, he hiccuped 14 times in the first 1 minute of a speech. He's been hospitalised to try and treat the complaint. Mr. Bolsonaro was stabbed in the stomach on the campaign trail back in 2018, then contracted COVID-19 last July, even though he was pretty much a denier of the virus. And while in quarantine, he was bitten by an emu-like giant bird. Enough said. Moving on to this week's interviews, Monday's interview was with Peter Switzer, the founder of Switzer Financial Services and one of the most experienced financial commentators around. We spoke about how to make money on the stock market, where the opportunities were, whether to use a managed fund, and what Peter looks at. Tuesday's interview was with Dr. Richard Favero, founder and boss of Soprano Design. Pretty much any time you've received a unique code for online banking, or a text message to say you've got a parcel coming, or perhaps when you voted all those years ago for a singer on Australian Idol, you were dealing with Soprano Design's technology. And Dr. Favero has just sold the company for $560 million. National Australia Bank Chief Economist Alan Oster was my guest on Wednesday, and we talked about the hit to business confidence from the current wave of COVID infections. Alan took me through what it all means and at what point a single city lockdown starts to hurt the national economy. Thursday's interview was with Megan Wood from accounting software company Intuit. Intuit's done some research into how much money advisors have been able to make or save for small business clients. It's well worth a listen, that one. And yesterday, my guest was Luke Hampshire, the CEO of Airly, a company that's making private air travel a little more affordable and a lot more accessible. If you missed any of them, find them in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Tomorrow morning, we're taking a closer look at the hemp industry. It's moved away from the stigma of illegal drugs and is now big business. And then on Monday, I'll be talking to Roger Montgomery, founder and chief investment officer of Montgomery Investment Management, about what the takeover frenzy means for local investors. I'm Sean Aylmer. Hell of a week, that one. Have a good Saturday and a great weekend.